Dissolution of Partnership, Lecture 4. Here we are going to begin with the accounts that have to be prepared at the time of dissolution. At the time of dissolution, we make a realization account, then partners capital account. Before that, partners loan account is also made, so let's write partners loan account and then partners capital account, and finally bank or cash account. In this video we are going to focus on a realization account only. We are going to do the journal entries of realization account and the ledgers simultaneously so that you understand both the things parallelly. So I am preparing the format of journal and ledger simultaneously. Here I have format of realization already prepared. Here is the format of a journal, date, particulars, ledger folio, amount, debit and credit. We will begin with step number 1. Step number 1 is transfer all assets. Your assets have debit balance. To transfer your assets you have to credit them. So the journal entry will be realization account debited to assets, being assets transferred, and this is how you post your assets. You write 2 assets and that is your step number 1. While transferring assets, you have to take care that only assets with the realizable value are transferred. Important point here to remember is goodwill is transferred. And second important point is while you are transferring debtors, you transfer debtors at their absolute value, and provision, if any, put regarding that is transferred as a liability on the other side. So if you have debtors 20,000 less provision 1,000, you will transfer 20,000 here. Second step, transfer all liabilities. Liabilities have a credit balance. To transfer them you need to debit them, so the journal entry will be liabilities account debited to realization account, being liabilities transferred. Please remember only external liabilities are transferred, so the ledger posting will be by liabilities. This is your step number 2. I repeat, only external liabilities are transferred. If any partner's loan is there, it will not be transferred. But very important to remember, if there is a loan from the spouse of a partner, it is regarded as an external liability and is transferred. For example, if Mrs. A had given loan, it will be transferred as an outside liability. Step number 3, all assets are sold. So when any asset is sold, remember assets had debit balance, you credited them to transfer. Now they do, any asset or liability does not exist in your book. You have closed all assets and liability account. To sell assets, the journal entry will be bank or cash account debited to realization. One more very valuable tip: once you have transferred all assets and liability, remember any following entry can be done only through bank or cash, partners capital and realization. Only these things will be there in all the entries because you have closed all assets and liabilities. So whenever you are framing any journal entry after these steps, the following steps will have only these accounts if it has to be right. So bank to realization, so whenever you sell you will write by bank. This is your step number 3. And when any liability is paid, it will be realization account debited to bank. I told you all assets and liabilities have been closed, they do not exist, so it will be to bank for sale of any, for paying off of any liability. One thing very important about selling assets, only the information given in the additional adjustment will be taken into account. But when we talk about paying liability, suppose you had transferred here two liabilities, creditors and bills payable, and in the additional information they were talking only about creditors. The other liability you will have to find out and pay in full. I repeat, even if they do not tell you that certain liability is paid, you will have to pay that liability in full. Next step is realization expenses. The journal entry will be realization account debited to bank or cash account for expenses to be paid. So here to bank when we are paying out realization expenses. The balancing figure will be profit or loss. If it is a profit, then you will write it here, to profit transferred to partners capital account A, B, C in their profit sharing ratio. And in case it is a loss, you will write here by loss transferred to partners capital account A, B, C. That's all. Needless to say, one of these things will be there. Let us talk about the journal entry. If it is a profit, then the entry will be realization account debited to partners capital account. And if it is a loss, it will be vice versa, partners capital account to realization account. That's all. Thank you very much. The capital account of partners is same as you prepared in all previous chapters, mostly same. So that is all. Thank you very much.